Now we've got our first panel of the day, and I want to welcome back the one and only, the voice of hospitality, Mr. Glenn Haussman, and his hotel investment in a COVID-19 world. Glenn, stage is yours.
Hey, Craig Sullivan, thank you so much for being here. Boy, oh boy, am I excited to be here with each and every one of you today at CLIC 2021. Now, I know we were all supposed to be together, and I've been telling Craig, I said, Craig, I think you're going to be the first ones to have a live in-person event. But unfortunately, that didn't work out. Can't wait to be with you all very soon in the room. But today, I promise you, we've got great content and great information that you're going to be able to enact right away. So I think the best way to get this started is to introduce everybody on our panel. We got Mr. Jim Butler of JMBM. We've got Jenny Redlin here of Partner ESI, Luigi Major of HVS, Kevin Lipson of Real Insight Marketplace, Bijal Patel of CHLA, and Keegan Bisch of Stonehill. Hey, everybody. How's it going today? Well, you know Excellent. What? Because we don't have an audience, let's do a little of this. Let's hear for him. All right, you guys are doing absolutely great. I appreciate you for being here. We got great sound effects going on. Of course, I want to thank you again for being here today. Today's going to be a little weird. I don't know if we're going to be able to answer any of your questions, but if you can, type them in the message thing just over there on your screen. So probably saying to yourself, Glenn, why do you got green behind you? Well, it's not a green screen. I'm just feeling green today because I smell money. I smell opportunity coming in 2021. The industry is finally, I think, moving in the right direction. We may not be there yet financially, but I'm feeling we're starting to get there psychologically. I'm seeing a lot of companies make great moves out there, a lot of fun things that are happening. So let's just start it off with Keegan, because he's sitting right next to me in this room. Keegan, great to see you. What is going on right now, in your opinion, when it comes to financing in hospitality? Such a big, important thing for all of us to be thinking about.
Sure. Yeah. Thanks, Glenn. Yeah. I mean, I think there's still limited financing available for hotels, but I'd say things are definitely moving in the right direction. I think, probably by the latter half of the year, we'll see an increasing amount of recaps and acquisition activity. I think we're seeing there's still, banks are still working through a lot. Most are trying to reduce their exposure to hotels in general. And then there's probably limited construction and CMBS kind of perm financing, but I think there's a lot of borrowers, there are alternatives available. A lot are trying to utilize the second round of PPP loans. And then, there's also a number of kind of bridge type alternatives, senior bridge loans, retroactive PACE, pref equity, different ways to kind of bridge this next period here.
Right. Bijal, I think he makes a lot of sense, but what are the owners in your association thinking about right now when it comes to their desire and interest in moving forward with investment in California?
Yeah, so it's been a challenging road for us here in the state of California. We were fortunate to be able to work with the governor's office on launching Project Roomkey, which kind of provided immediate occupancy and a little bit of revenue for hotels. But I think a big challenge in the state of California right now is the governor has now sunsetted Roomkey and is transitioning everything to Project Homekey, which is giving actually owners an exit opportunity here in the state. And so for us as a membership organization, directly tied to the number of units in the state of California, that does represent some challenges for us. But it does, I think, give owners an opportunity to reposition some of their older assets, especially assets that don't necessarily, meet the needs of today's travelers to alternative uses with the help of government funding, and then go and reinvest that. So I've worked with several ownership investment groups here at CHLA that have basically sold off assets to the state of California and are now looking for properties to reinvest in the state. So it is kind of encouraging to see that with all of that, there still are, companies looking to reinvest in our industry here in the state of California.
Excellent. I'd like to welcome to the stage right now Mr. Biran Patel, chairman of the AAHOA, joining us right now. So, Biran, so great to see you. I'll let you get caught up on our conversation and get you in there in just a second. But, Luigi, what are you seeing over at HVS as it pertains to the California market right now, today, on March 4th?
Of course. Well, as you know, we focus a lot on valuations and market and feasibility studies. And I think for me, the most shocking thing has been how little values have been impacted. I think going into this pandemic, people were expecting many deals and and significant drops in values given how severe the downturn has been. But so far, we're seeing drops more of 10 to 15%. And part of that has been that owners have received significant stimulus and they're not selling. Buyers believe that the values should be lower and they're not buying at the current prices. So there's been a little bit of a standstill. And now that we're at this point a year now, we're looking into the future and everybody is forecasting a more healthy recovery. So that's one thing. And then another thing that I noticed is that when we start to look at how attractive hotels are compared to other asset classes, namely office space, for example, now hotels are becoming much more attractive than office spaces. So we're seeing those discount rates drop a little bit for some locations, as well as the cap rates.
Wow, fascinating. Jim, what is your sense of things out there right now when it comes to the legal perspective?
We are at kind of the intersection of hospitality and the law. There's a lot of tumult. The economic pressures have created tremendous pressure. So we are thrilled to see what looks like all the green shoots and things coming back. But we don't seem to be in what I'd call a standard distribution or a normal bell curve where you look at industry averages that really gives you a sense of what's happening. The average has such outliers, and the outliers are tremendously different. So we've got one deal where we're assisting a client in buying a hotel out of bankruptcy, big hotel in a resort area, buying it at all in with PIP will probably be 50% of replacement cost. That's normally a pretty good indication in a crazy market. That isn't everywhere. Right. That's kind of like hen's teeth. There has not been a flood or the tsunami of these things. But we are seeing distressed notes, and I think that while the recovery will come for many, particularly in secondary and tertiary markets and extended stay, if you're in an airport or a conference center or an urban center, some of these guys just aren't going to be able to hold on long enough. If you're in Minneapolis at the conference hotel, you're probably closed, and you may be a year or two from opening. So there's distress, there's bankruptcy, there's workouts, there's receiverships. There are kind of innovative things that can be done. I think what Stonehill is doing in PACE is the new EB5, or that's the hot ticket on financing. And there are just lots of opportunities to either preserve or create value, dealing with everything from labor unions and changing brands and management contracts. Not that you always should, but things are in motion, and we help people move them to create value.
That's right. Welcome to the Great Reset, everybody. A chance to rethink absolutely everything when it comes to your hospitality investments. Kevin, I do want to come to you in a second, but Jenny, I know we've spoken before about opportunity with distressed properties. To me, this seems like there's going to be a lot of potential for investors to make money specifically in this. I saw recently, I'm forgetting the name of the company, but $1 billion fund was set up to start helping hotels that are in distress. How are you seeing that side of the market?
Yeah, absolutely. I think across all asset types, I think everyone took this time during COVID to kind of collect money and be ready to pounce, right? And we'll see if that will kind of soften the landing of these distressed assets. I've certainly started to see clients start calling me for auctions that are happening with some distressed assets. But interestingly enough, we'll get all queued up, and then they'll actually get priced out of the deal just as the auction starts to go. So, I think there's still appetite there and a lot of competition. I have seen some foreclosure from banks, some foreclosure work as well. But like Jim said, it's kind of all over the place. You know, and then I have other folks that are raring to go buy, right? And so I think it's going to depend. It's probably going to be market by market. We're also still active on the construction side. Like Bruce was saying, everyone's still building because that's a longer forecast. Like Luigi was saying, you know, everyone's still optimistic about the future here. So we're kind of like spaghetti out the wall here with we're going in a lot of different directions. And the repurposing of hotels, they mentioned, you know, a lot of renovations going on. I had kind of predicted early on that people would do that to take the opportunity when their hotels were not you know, were vacant, and to go ahead and do that. It sounds like that's finally starting to happen, and we're certainly seeing that on the construction side as well. So you know, with distress, there is some distress in the marketplace for sure, but it's just not consistent across the board like we all would have thought, I think, in the beginning of this.
That's right. And I would like to add, my apologies to Bruce Ford. I missed his session. Unfortunately, I do No Vacancy Live every day at noon East Coast time, 9 a.m. West Coast time, Mondays through Thursday. We had on Danny Hughes, president of Americas for Hilton, for example, today. And he was saying they had 414 hotels open up in 2020 and will open up even more this year, going right to Jenny's point about that long tail. Now, Kevin, let me bring this over to you. You're focused on auctions and stuff like that, but I'm curious as to what types of properties are going up to auctions. I know we're talking market by market, but I think it's more than that. It's more about people that might have gotten into deals they probably shouldn't have when they were having all of the belief that the upmarket was going to go on and on forever, and we had no idea what COVID would even be. So how do you see it, sir?
Yeah, so Jenny touched on it very well. There's a lot of investors that have raised capital and are getting priced out, and we're seeing that in our own auctions. We have a very good lens into the distressed space. You know, Real Insight Marketplace, owned by CW Capital, the special servicer. We have about $9 billion of hotel loans that are in stock today, and many of which are in California. And I'll tell you that there has not been as quick of a turn for those loans. There's not a return to REO. And some of our controlling class bondholders that are really driving the ship, they're pretty inclined to hang tight and let things season up a little bit to a point where they're comfortable disposing. So that whole wave of distress that I think everyone was anticipating would hit in Q1, it's probably Q3, it's probably Q4. In our auction platform, we don't just sell our own assets, we sell a lot of assets for third-party clients and institutional clients. And the institutional quality product that is in distress, where they are truly sellers or they are motivated to sell, it's pricing at a 15% discount to 19 levels. But when you're talking about some of the private client sellers, there's much more of a bid-ask spread, and that's true just across the industry as a whole. So, you know, I think what's really been able to hold pricing to a point that probably higher than where it should be in light of where the performance of these hotels are. It's obviously some of the stimulus packages, but more importantly, the scarcity of assets that are on the market and the human capital that are chasing opportunities today.
Right. So, Biran, I started off this conversation before you were able to arrive, talking about we're at the precipice of opportunity out there right now. What type of opportunities do you see going forward this year and into next year for yourself as a hotelier, but also for folks within the AAHOA organization?
Yeah, I think my fellow panelists talked about various aspects of this. But for myself, I think that, the third and fourth quarter, I do see some opportunities for some acquisitions. I think that some of the companies who have maybe over leveraged themselves will start having to, after this second round of PPP, how long can they survive with the CMBS loans? I think there's more properties that might come up, but not as much as people anticipated last March. I think people thought that you were going to get properties for 30 to 40% discount. And through this pandemic, we've seen there hasn't been that many. It's maybe 10, 15%. And as the vaccination has been rolled out and as the new administration has kind of addressed that by May, probably almost all, everyone should get access to the vaccination. I don't see the discount being as big as people anticipated. Maybe on the CMBS side, that's still up in the air. There really hasn't been much assistance from the government in regards to that. So it's going to be determined. But even for the members of the association, I mean, some are still acquiring during this time, and some are just holding back to making sure that their properties stay afloat. And as things open up and there's more clarity here down the road, that gives them a better vision of what they should do with their companies.
Luigi, how are people considering risk right now? Biran brings up a great point. There's still people that are involved in it, but there's some people that are nervous about it. So where are you seeing the general consensus falling right now today, and where do you think it's going to be headed in the near future?
It's hard to determine at the moment, because when you look at what's happening to revenue at these hotels, I mean, it's really shocking. We're still down 40-50% in revenue. Many properties are actually losing money. So you would think that we would see values down 30-40% at least, but that's not really what's happening in the market. So whether it is a flood of capital or whether it's monetary and fiscal stimulus that have made it work, I think that, to be honest, people are throwing caution to the wind and making decisions, which I'm not 100% sure why that is. I've heard sometimes that people are maybe factoring in inflation into the future, because if this money does make its way into the system and eventually gets unleashed into the real economy, we may see more inflation, and hotels might be a hedge against inflation. So maybe the purchases are an inflation hedge. But we see. I'm not 100% sure that investors are really accounting for the appropriate risk at the moment.
Interesting. Bijal, do you agree with what Luigi is saying?
Yeah, I mean, I think when you're in hospitality, we are an extremely resilient group. My perspective, I'm a third-generation hotelier. My grandfather entered the business in the 70s, and we celebrated 44 years in the hospitality industry this last fall. And I was having dinner with him, and we're right in the middle of the pandemic, and he was talking about oil crises and earthquakes and floods and 9/11 and wars and everything that we've been through, but each time we've emerged resilient. And I think that for many of us that are in the industry, we have chosen this as our path. I think for us, we're just looking forward to that light at the end of the tunnel. As Biran mentioned, the administration announcing vaccinations being available by the end of May is incredibly encouraging news. We do still have some challenges still here in the state of California. Something that CHLA has been working on immensely has been our lack of meeting guidance. So we are the only state in the union that does not currently allow meetings to operate, and we have no guidance on the forefront for that. So there are still some challenges as we get out of this pandemic. We have been lobbying Sacramento for this meeting guidance, especially as vaccinations have been ramping up. But for meeting business, if you look at the state of California, and we have San Francisco, LA, San Diego, Sacramento, those are all meeting hubs. So as much as tourism is an important part of our economy, that corporate business and meeting business is exceptionally important, and we still have some work to do. But the association, along with at least my ownership group, we are incredibly optimistic and resilient to this process. And I think, if anything, as some of my fellow panelists have mentioned, it's that reserving your cash and getting ready for the day that we're ready to open the floodgates and go at it 110%.
Hey, Keegan, over at Stonehill, how are you thinking about people that might have a little too much exuberance and folks that might be way too negative on the other side? How do you find a balance there when you're trying to determine what makes sense, what doesn't make sense, when it seems like the typical rules of the game have not only changed, but they're continuing to be in flux during this weird period of time?
Yeah, I mean, I think there's general optimism toward the end of the year here, just with the vaccine rollout. It's a very uneven recovery, as others have alluded to. But I think there's still a lot of caution going into urban markets and some of the group houses, gateway markets. I think we still generally believe in the recovery there and group and business demand coming back, which is essential. But I think with those, it's really looking to how much is the need to really bridge that gap when, you know, some of those hotels are suffering a lot more. But, you know, I think in general too, you know, there's not a lot of data points as far as how you're valuing a hotel today. So I still think there is a look back to 2019, you know, the general consensus we get there in, you know, a few years. So it's still a ways to go.
You still think that the fundamentals are sort of in place, even as if they haven't been for the last year, right? That make sense?
That's right. Sorry, that was for me? Yeah, yeah. The fundamentals. Yeah, I think are still there. I think occupancy is, you know, kind of coming back, and ADR will probably take a bit longer. But you know, there's certainly pent up demand, and we've already seen it on the leisure side, and I'd say just in a lot of the ways we're beginning to see already as you know, groups do start heading back to the office. I think they're, you know, the demand will be there as well as some of the conferences beginning to schedule, you know, for later in the year, and the demand seems to be there.
Makes a lot of sense. Jim, I'd like to throw this to you. So how are you seeing people balancing the industry out there and opportunity?
Well, I think it comes back to the point that was made earlier, that the situations are all over the lot. You know, they say if the NASA astronauts, when they're out at the space station, the side of their suit facing the sun is, don't hold me to these numbers, but 250 degrees Fahrenheit. But the side away from the sun is negative 250 degrees. The average is 0, cold, but you know, you could survive it. But you can't survive either one of those two extremes. You got to look at every single property. It's market by market, segment by segment, property by property, and you've got to examine it. So more than ever, the due diligence and the examination and the creativity of what you do with an asset and how you make it work. I've never seen so many hotels going to multifamily and other uses. People usually it was apartments going to hotels because they thought that was a higher and better use. But the project room key, people are looking at each asset and figuring out, what do I do with this? What is the timing? And then what resources can I bring to it? Due diligence and creativity will never be more important.
Yep, makes a whole lot of sense. Jenny, Jim brings up repurposing assets, reinventing them. What are you seeing over there right now in your business over at Partner Engineering and Science?
Yeah, absolutely. We're certainly helping in those projects, right? So we are seeing hotels being repurposed to multifamily, and we're helping with the redesign and the feasibility studies of those types of things. So it is interesting to watch. You know, I think multifamily is still, even though with all of the, you know, rent forgiveness and all the other things we have in California, multifamily still tends to be the darling. And with the housing shortage, you know, it's definitely something that's being considered by a lot of our clients.
Fascinating. Great idea. Biran, what are some of the hoteliers in California do you think are seeing for their assets if they're going to reinvent what they're doing going forward?
You know, Glenn, I've heard a lot of people thinking, as you know, as Jim mentioned, that there's some older boxes that they feel that it would be a good opportunity to convert to multifamily, and because the demand right now is in multifamily. So a lot of hoteliers I've heard are getting asked if they're willing to convert or sell their property because some of the next buyer is wanting to convert to multifamily. And so the hotelier is having to think about, hey, should I keep this asset or is it worth selling at a certain price point? It's lucrative for them in order to, you know, for the next buyer or for themselves to convert to multifamily. Is a hot topic right now. A lot of people are doing it, especially in my state of Texas, and I heard a lot of people are in California also.
Fascinating. Kevin, any insight onto that with properties that are up for auction?
You know, I think I've executed on 4 trades in the last year that were all conversions to multifamily. We're selling actually a DoubleTree in Pittsburgh, PA, which, look, it's not a California asset now, but the wide swath of investors that are showing up for auction, which is happening at the end of this month, are multifamily investors. And generally speaking, they are more aggressive on pricing than the hotel. So it works pretty well on our platform. You definitely need to have some conversations with the city ahead of time, but it is made for a very good execution for sellers in that you're able to obviously widen the investor pool to not just hotel investors, but to multifamily investors as well. So I think that'll continue to play out. There's definitely some institutional groups that have launched funds, and it's a very difficult strategy to scale because every deal is very unique. But I think that'll continue to be a reoccurring theme through the remainder of 2021.
With repurposing? You there? Jim, can you hear us?
Glenn, I lost you.
Oh, yeah, I just wanted to say all this comes together in another way, which is as people go to terminate their franchise on the hotel that hasn't been able to operate profitably, and they start looking at liquidated damages, there may be interesting ways to be able to terminate the franchise that isn't apparent. Sometimes the condemnation provision. We've done a number of sales where the city or state was willing and prepared to condemn the hotel, and the condemnation clause of the franchise agreement provides that that is a free termination right. So, but that's true for all of this, for the long-term agreements that can be encumbrances on the hotel when you're looking at repurposing or rechanging. When you're in bankruptcy or receivership, these aren't pleasant things, but there are things that can be done to create incredible values. We have 2 hotels that are now in receivership, and the termination of the long-term branding agreements on those will result in $50 to $80 million of value increase for each of those hotels. I mean, that makes it's from being underwater to being in the green. So all of this is creating tumult that people look at.
Right. Interesting. So, Luigi, back to you then in this. A lot of properties start to get pulled out and become multifamily or just condemned or maybe just become parks or whatever. What does that, do you think, can affect valuations, if at all?
Sure, Glenn. Well, to first add to the conversation on the multifamily, we've done some analysis on conversions, and for the most part, they did not work. And I think that multifamily could work if it's a very distressed market or very distressed property. But if you're in a healthy market or a market that is expected to recover, then the numbers just don't pencil, because right off the bat, you probably have to reduce your room count by half because you have to make bigger rooms. You have to add kitchens. You have to deal with zoning. So the conversion costs are huge. And then ultimately, you're going to get a much lower revenue compared to the same room rate. And obviously, your profitability is much higher on multifamily, but it still does not offset all those other costs. So that's my those are my thoughts on multifamily. And what was your other question?
Just curious if a lot of properties move to family or other purposes, there'll be obviously a lower pool of properties. Will that positively or adversely affect valuations?
Yeah, so that we've actually done some analysis on some markets where there's been supply taken out of the market because of project home key or room key or things like that, where those rooms are no longer available in the market, and we definitely see a much faster recovery. So it is true. If you have a decrease in the supply, you're going to see those markets recover much faster. Right now, unfortunately, we're seeing the opposite. The hotels that were closed are now opening, so now we have a full inventory, and everybody's going after the same business. So we're seeing the opposite dynamic.
Right, interesting, because there's a lot fewer people still right now traveling, but more hotels have opened their doors, making it a little bit more challenging. I've been around the business long enough to remember in the late 1990s, a lot of product in New York City was turned into multifamily, and that wound up not only helping those owners of those assets, but opened up opportunity for a whole new slew of types of hotels to come into the city. Most notably, I would say the rise of the select service hotels in Manhattan in particular. Bijal, when you're thinking about hotels being brought out of the market, what does that mean for you and your constituents in your organization for hotel investment in California? Are they still going to keep these hotels? Are some of them going to switch? Are they going to say, oh, I can move this to multifamily and now invest in a brand spanking new XYZ branded hotel?
Well, I think it's all about. I think actually you pointed out, Glenn, at the beginning of this session. This provides an opportunity to reset, and so what we've been seeing is, if you've got a portfolio of 6 or 7 hotels and 2 or maybe your legacy assets that you would will use your first foray into the hospitality world that were the first generation bought. This is now giving Project Room Key and Home Key are giving you the opportunity to reposition those. But what we're seeing is all they're doing is then taking the gain on that and really just applying it onto the development projects that they were already either had in the pipeline. I mean, the trouble about developing hotels in the state of California has always been you're on a 5 or 6 year development cycle, right? So a lot of people had projects that were already slated to happen pre-pandemic or currently happening right now. And Project Roomkey has actually provided a lifeline for them in a sense of, being able to repurpose some of those older assets, maybe the smaller 2-story exterior quarter hotels, they've been able to sell those to the state, but they're doubling down in most cases that we've seen, at least, and continuing forward with their development plans. So I wouldn't sound the alarm bell necessarily yet. And as kind of Luigi pointed out, we just don't have the data yet that multifamily is really the way to go on this. So, let's kind of see how it kind of shakes out. I know a lot of the transactions in the state of California haven't necessarily been private transactions, but really it's the county coming in and, taking over an asset and turning that into homeless or some type of community housing. So that's kind of, I would say, the interesting thing is that some of these things that we're talking about, across the country are, multifamily developers coming in and taking over hotel assets. But I think the one thing in the state of California with Project Home Key, I believe we're kind of one of the only states in the union that has this program and the funds allocated for that for the county to actually come in. And the valuations we're seeing, the counties are paying, 180 to, 200,000 a room to come in and take over these assets. So it's kind of interesting because here in the state, you're kind of competing with a state entity, when it comes to, repositioning these assets versus a private buyer. But I've spoken to a lot of hoteliers that have taken advantage of these programs. And they would do it again and continue to again. But like I said, most of them are, then going and saying, okay, I'm going to trade my 60-room asset, but in the same market, I'm now going to build, 120-room, mid-scale property. So that's kind of, I haven't seen the exodus from the industry yet, which I think is reassuring.
That is good news. So, Jenny, let me kick this to you since we haven't heard from you in a while. Any thoughts on what everybody else has been saying about potential opportunities in this regard? And also, I know you're very focused on like environmental services and stuff. How much are people focusing on this right now when they seem to have a lot of other problems?
Sure. So I think there's a couple of things on the environmental side. Obviously, with like repurposing, there's asbestos and lead-based paint and just things like that you have to worry about when renovating. But in the height of COVID, we were focused on our COVID services and our cleaning of places and cleaning verifications and things like that. So I imagine that even as we reopen, I think a lot of folks are still going to have a little bit of tendency to be germaphobes. I know I will for maybe the rest of my life. I don't know. This may have scarred me forever, So I wonder if things like that will still come into play on that side. It'll be interesting to see for sure. And then other things that we've seen too, as we mentioned office a little bit, some folks and maybe if we are going to get rid of office stock and people are going to work from home, that maybe more hotels are needed. And we've seen some project designs and some contemplating of, you know, a mixed use with office and hotel even, or just, you know, mixed, and then of course adding the retail element and everything else. So it's, I think a lot of innovation and creativity, as Jim was saying, is going to come out of this, and everyone's going to rethink a lot of different things in their new development plans here.
I'm completely doubling down on my belief that the digital nomad is going to continue and be even more powerful in the future than we saw them rising prior to the COVID pandemic. Why? Because as people have now more opportunities to spread themselves out and work wherever they want, chances are they're going to want to travel more. Chances are they're going to want to set up shop somewhere else, and taking a portion of that hotel and turn it into co-located workspace, I think is great. Don't look at some of the companies out there that focused entirely on that and may mismanage their funds. I think individual properties have the opportunity there. But Keegan, you know, you guys are putting money out there in the marketplace. If you can think about products and services that hotels can offer that appeal to you most of all, what types of hotels are you looking at right now going, I'm more confident this is a better bet than other types of products?
Yeah, I mean, you know, as a company in general too, I mean, we are focused on, you know, I'd say select service, extended stay, you know, generally branded product. So, I mean, I do think, you know, and I think that's helped us fare well on a lot of the investments we've made. But I think we will see an uptick or continued demand for a lot of the drive to leisure, a lot of the business hotels. I think, you know, I think that will come back. So I think we'll see an increase there. You know, I think it is kind of just it is hard to know what's going to happen with a lot of the bigger boxes, but you know, see some of that demand coming back as well. But I think that's the biggest question mark.
Yeah, I think me personally, now mind you, I'm not a hotel investor. I just play one on TV. And I think that things will come back at those big box hotels. It's going to take a few years, but things will come back. Let's not pretend ourselves that all of a sudden humanity is going to be completely changed. Maybe Jenny won't want to shake hands with me, and I'm going to have to be okay with that. But I'm still going to see her in person over there. Bijal, I'm going to ask you a question in just a second that Ash is putting out there. But Biran, I'd like to get your thoughts, if you have any other thoughts on what types of properties you think your hotel community investors are going to be looking at on a go-forward basis.
Yeah, you know, for the most part, as everyone knows, that the economy segment has pretty much stayed pretty stable throughout this pandemic. So you won't get a chance to see much economy segment, I don't think. And if you do, then you know it's not going to be at a discounted price if you're thinking of conversion. But select service, upscale, I think there's possibly some opportunity. As we mentioned earlier, there's some funds that people have created and to be ready for something like that. But I think that, you know, even development, I think during this pandemic, it's given some groups a chance to finish their projects out. Some who have even signed already the brands and they already had the land ready to go. They have started their projects. So they were thinking that as we come out of the pandemic, their hotel will be ready to go. And you know, cost and labor and material, and that kind of was down about 10-15% during this pandemic. So people have the opportunity to either start their project that they had in line or continue their projects.
Makes sense.
You know, Luigi may have some input on this. I'm just amazed that for, I think it's 20 years now, extended stay has been the amazing segment that grows and grows and grows. The fastest growing, the most profitable. Everybody wants it. Everybody says it can't go on, but it's been 20 years of this incredible, supposedly unsustainable growth. And I guess the incredible GOP margins, the cost, the financeability have all made it. And I think that continues to be a huge, huge target.
Yeah, I absolutely. The Highland Group just put out some incredible numbers for how that industry is doing. And like Jim, I can't remember the exact numbers, say 250 degrees. So Luigi, what are your thoughts on what Jim was just saying? He wants to toss it to you.
Sure. Well, to add to that, I I think things will come back, but I think we're going to see a fundamental shift. I personally don't believe that corporate and group are going to come back as we now expect them to come back. But you're right, Glenn. We're going to see the new digital nomad taking over and staying a week or 2 weeks at a hotel and making up for those lost room nights. I was just working at a resort, and very low occupancies, but at the lunch restaurant, half of the people eating there had their laptops out. So I think that when we come out of this, we're going to start to see a lot of work from hotel people visiting properties.
Right. Now, remember, everybody, I don't think we're going to see brand new trends necessarily being born out of this. What we are seeing, though, is an acceleration of things that were already in the marketplace. You may not have noticed them. You may have think they're brand new, but they were there. And that goes to the digital nomad. That goes to the extended stay hotel. That goes to a lot of other issues. Now, one thing people are paying a lot more attention to, and Bijal, Ash Patel is asking this question. I'd like to hear what you have to say about this. Do you have any idea how COVID cleaning material and additional labor to implement OSHA and CDC required mandates is costing hoteliers, and what's the effect to that?
Well, thanks for the fun question, Ash. This has been the pain of my existence the last 6 months. No, I'm just kidding. But, it's been a constantly evolving framework. And I think this brings up a good point, especially when we talk about hotel investment in a COVID world, and especially in California moving forward. We can't forget the regulatory environment that we are all doing business and in the markets that we're talking about here, right? So I think, California has always been leading when it comes to regulatory practices. I worked with Craig on Prop 15. I mean, they were going to raise commercial real estate taxes in the middle of a pandemic, and CHLA was yeah, and it was very California, and we had a coalition with AAHOA, with CHLA, with a lot of different organization groups to defeat Prop 15, and we were very lucky. It was a very narrow margin, but we ultimately were able to defeat it. So, it's we can't put anything past our legislator, even in the middle of a pandemic. And so I would start by saying that, if you're considering investing, or you are continuing to invest in the California market, paying attention to our legislator and our regulatory environment is a huge part. It's a huge part of the services that we provide at CHLA. Now, on the evolving OSHA and CDC requirements, we are currently in the process of trying to seek clarification, figuring out what's long-term, what's short-term, and how it's all going to play out. But there's also other things to consider as well that are involved in the San Francisco market. But CHLA was involved heavily in the healthy building ordinance that was proposed in San Francisco, and that I think it's presenting challenges, because before, when you'd see regulation in the state of California as it pertained to hotels, it was limited to those larger hotels. It was the larger box hotels. It was 150, 200 room boxes. But it's slowly now started to creep down. So, you have healthy building ordinances. Oakland has Measure Z. Long Beach had measures. CHLA sued both Long Beach and Oakland. Those are coming down to 50 rooms or more. So that's suddenly starting to affect and adding, labor and all kinds of regulation to rooms that are 50 rooms, hotels that are 50 rooms. So that's kind of coming down to the limited service side. So I think, if we are going to have a conversation about hotel investment in a COVID world, and especially in the state of California, we need to kind of remember that, the state that we live in with the legislator that we have, that does factor into our underwriting. That does factor in to our net operating income as well. So kind of an important part, and I'm really glad Ash, kind of asked the question.
Yeah, I am too. Jim, now I got to throw it to you. What is your thought from your legal mind on the issues that we're talking about?
Bijal really hit it right on the head. I mean, we are all looking to get back to normal, to become profitable, to find ways to create a new niche in this constantly evolving market, and worried about both driving the top line and protecting the bottom line. In the middle of that, there are all these snags that Bijal has thrown out, and you've got to keep looking at them, because there's always somebody who's looking for a free lunch or going to come after you. You've got COVID. You're going to have workforce issues. You're going to have, do you mandate vaccinations? Do you have vaccination cards? Always critical to have your communications with the workforce, that you want a safe place. You want customers to feel safe, but the regulation in this area is significant. Our labor people are extremely busy working with hotels and hospitals on how they do these regulatory compliance. The ADA never quits. Americans with Disabilities Act. I think there have now been 50,000 lawsuits by plaintiffs, not just against hotels. They're mostly concentrated in 5 states, California, Texas, Florida, New York, and New Jersey, but it could be anywhere. And there's always a new twist. You know, it was, do you have the handicap parking? Do you have accessible pathways? Do you have website and audio that for the hearing impaired? The latest is a new website thing that you are required by the ADA, they call it section 230.2, to state what your accessible features are. Now that seems easy, but it's actually, I mean, it's a morass. So our ADA people are helping people avoid that by identifying what you're required to say and not say more. And prevention is always, the ounce of prevention. Cybersecurity, California, federal, again, these are serious breaches. There are bad people out there. You need to be sure that you're protecting yourself, and you need to comply with the regulation, or you could get whacked big time. And just the labor and compliance issues, working with the unions, working with workforce. You've got to be not just focusing on running your business and controlling your costs, but protecting yourself, and it's a challenge.
Yeah. It sure is.
ADA, I'll just say something really quick too. Yeah, so don't ignore, if you're going to be doing that renovation, the last thing, we'll have clients call us after the renovation is done to go do the ADA survey. And well, when we find the problem and you've got to rip up that nice new thing you just built, that's a huge issue. So make sure you get the ADA design folks, do the audit, do the survey, and then have your architect plan everything. I've been involved in too many of those, and it's just sad.
Couldn't agree more. I just say you would think architects would do this, but you really need somebody who understands the ADA. We don't do the survey work. You need someone like Jenny to do that.
Yeah.
We do the legal.
And in California, we have CASP as well, so it's kind of twice the trouble.
Do it once, do it right.
The ADA issue has.
Biran, go for it.
Yeah. Sorry, Bijal was going to say something.
Yeah, Bijal, go for it.
Yeah, so the ADA issue has been something that we have been struggling with, constantly bombarded by our membership about issues with the ADA lawsuits, these frivolous drive-by lawsuits. What we did is we have created a industry-leading ADA lawsuit assistance program, which we've been really successful. So the challenges that have been happening with these ADA lawsuits is an individual hotel ownership group gets sued and they end up settling out of court, and there's no kind of communication with the rest of the industry about that case. Right. So what was important about this ADA lawsuit assistance program was we now found ourselves gathering data on these cases, and we suddenly started to notice trends. Okay, what are they going after? What is the pattern here? And then we were able to identify legal strategies to help hoteliers actually fight these cases. So the goal of the program that we created at CHLA was to help our membership to actually fight the cases, but then also to kind of create a legal sharing mechanism where we could kind of unify, because it's only a handful of attorneys and plaintiffs that are filing these, right? And they all follow the same cookie cutter thing. So if a hotelier gets sued in LA and they're successful in winning, why not take the win on that case and help a hotelier in Northern California? And our program now allows us to kind of collectively share that data and then pursue wins across the state. So I'm really excited about that program. And we're doubling down on this because this is a huge. Again, we're looking at all aspects of a hotel and evaluating net operating income. You don't want to have a line item that's legal settlements, and it's 25, 30, $50,000 a year, that you're settling these cases out, especially coming out of a pandemic when we have, such little to work with as it is. We want to try and preserve our NOI.
Right. So, Biran, I got to ask you, I know AAHOA has been very focused on ADA. I'd like to hear what you have to say about how you're doing that. Then you became chairman of the organization at the most difficult, strangest time in the hospitality industry. I'm curious to learn what the number one thing you learned in this period of time. So ADA, and then tell us a little bit about yourself and what you learned.
Yeah, so in regards to ADA, as my fellow panelists mentioned, it's been a hot topic, and especially in California. We're hearing it even more now in the Virginia, DC area. That's been a hot topic. So we're working with, a broad coalition of disability rights groups to expand the access and to prevent abuse by, the unscrupulous lawsuits by these predatory lawyers. So, we're trying to work with all the state associations and with these disability groups to make them understand that we're doing everything we can as hoteliers to abide by the rules and regulations. Now, we've also made sure that, hey, if our properties are not in compliance, then give us a grace period to fix that issue instead of these lawyers just making $5,000 or $3,000 free, basically just because hoteliers want this out of their, off their plate. So, people will just settle for $3,000, $5,000 and that thing's building up. In regards to this past year, it's been, as when I took over, we're last June, we're in the middle of this pandemic. And, just been, trying to educate our membership and the industry of how to navigate to the road to recovery. This has been new to all of us. As we learn new things, we try to educate our membership. We've had over 200 webinars just last year during this pandemic on things that are related and how to help hoteliers out, whether it's banking, brand related stuff, the cleanliness protocols. And then we've had, several virtual events to help the industry and the membership out of what to do. And, and then we have a staff in DC and in Atlanta that can, address any needs you have during this time. And, so I think that education is phenomenal, and I hope that everyone takes advantage of that.
Excellent. Well, believe it or not, we're just about out of time, but Jim, why don't you say what you need to say and then give us a final thought, and then we'll get everybody else's final thoughts.
Biran, couldn't agree more. I just want to say you need to distinguish two kinds of plaintiffs in the ADA area. The most despicable is probably the plaintiffs' lawyers who go around and literally file dozens or even hundreds of these a week. And they are in it for what some people would call the blackmail effect of it's cheaper to pay, $10, $15, $20,000 than it is to litigate it. But worse is the true believer. And these are typically people who have handicap. They probably went to law school, and they don't care that the ADA talks about reasonable expense and things like that. They want to make the world flat for everyone. And so they don't care if you rip down your building and what it costs. They don't want $5,000 or $15,000. They want the world flat. So you got to know who your adversary is, and there are different strategies for them. Prevention is always the best. Get the checklist, do the surveys. There are training so that if you keep your TV remote down at a waist level and it can be accessed, you avoid an inaccessibility claim that it was up on a shelf somewhere in a credenza. Prevention, and get people who know what they're doing.
Right. And a final thought from you, Jim.
This is a time of great opportunity. Biggest changes that we've seen really in a lifetime. You've got to be nimble to stay alive. You've got to be nimble to see the opportunity and to watch everything. This is going to be an exciting ride. I look for the green shoots growing.
Yep. Great advice. Keegan, final thought from you, sir.
Yeah, I think, a lot of optimism for later in the year. And I think it's, I'd just say there are, for groups that are needing liquidity and just needing to bridge to that other side, there is capital available.
Excellent. And I've got a lot of optimism for the sandwich I'm going to eat in a few minutes. I'm excited about that. Luigi, final thoughts from you, sir.
Sure. I would say I'm cautiously optimistic. I don't think we're out of the woods yet. I think that investors need to take into account appropriate risk. I think ultimately there's going to be a boom, and probably the biggest boom we've seen in travel and in our industry. But right now it's a time to remain cautious.
Right. Great. Jenny?
Well, I sure am ready to get back into traveling and a hotel room without my children around. That'd be great. So I'm optimistic that it will come out. I do think, though, I was just on a retail panel a while back, and it's kind of a culling of the herd a little bit in that sector. And I wonder if that's going to kind of play true here as well, as kind of the weak will die and the strong will survive here. So, only time will tell, but I have a sense that might be the case.
Bijal?
Yeah, well, Glenn, I recently wrote a quote by Sidney Marcus from Neiman Marcus, who said, "The road to success is paved with mistakes well handled." And I think that, we've dealt with a lot of uncertainty in the last 12 months. Can't believe it's going to be a year. But as we go forward, I think it's important for us to focus on the things that we can control. And I think, portfolio, occupancy, operations, our balance sheets, and most importantly, our mindsets. How we control and demonstrate our motivation to those around us is going to be incredibly important. So I'm cautiously optimistic, and I can't wait to have meetings open up again in the state, and hopefully just get back to business and see all of you again in person.
Yeah, you got that right. Kevin?
We're very optimistic from the standpoint of the auction platform and even from the special servicing business. I think it's going to be a very active investment and sales market in Q3 and 4, and hopeful there's a back to performance in hotel space. So we're just looking forward to seeing some deals get done.
Yeah, we all are. Biran, why don't you wrap it up for everybody?
Yeah, I think that our industry is a resilient industry, right? I mean, we've dealt with 9/11, 2008 financial crisis, and now this is something that we've never seen before. But we as hoteliers, entrepreneurs, are resilient, and we're going to get through this. We'll be even better hoteliers, better entrepreneurs than we were, pre-pandemic. I think that there's light at the end of the tunnel. The light is even bigger now than I would say maybe last October, November. So just hang in there. And hopefully we get out of this sooner than later.
Yeah, absolutely. And listen, everybody, the hardest part is behind us. We've done it. We've made it through to this point right now. And if you look about the last major pandemic we had, 1918, 1919, what was that followed by? The 1920s, which we all call the Roaring Twenties. For a very good point. Our panelists pointed out there's great opportunities out there, unknown opportunities out there. And while folks have suffered and will continue to suffer, for many of us, it's going to be unprecedented chances to make a big difference in our personal lives, in our business careers, and in our hotel investments. I want to thank everybody for being here. You guys are so great working with us in this virtual environment here. So thank you so much for that. Let's give everyone a big round of applause. Great job, guys. Great job. And let's give it back to Mr. Craig Sullivan. Craig, thank you for trusting us with your conference for the last hour. Craig?
You know what? It's going to be the voice from above, Glenn. Great panel.
EOG. God, coming right at you. Where are you, Craig? Where are you?
I'm not telling. I'm in the bat cave. So, hey, great panel. Thank you, everyone. I also wanted to make mention that we have a new partner with CHLA and their scholarship program. And Bijal, it's a pleasure to have you join us. Biran, it's a pleasure to have you here. We've been supporting the AAHOA program for a few years now. But let's talk about CHLA. They gave out almost $120,000 in scholarships to 65 students that averaged about $3,000 per award. Over the past 10 years, they've issued over 750 scholarships. So, one of the foundational parts of this conference is to give back to our educational organizations and help out tomorrow's leaders. So thank you all very much. We will be back here at 12:10 for our second and final panel of the day. So please go network. Please go into the rooms. We've got 8 brands here today for all of you to go in there and get information from and talk to. And you can also go over to Glenn Haussman's guest room, and he's doing interviews. So thank you all very much, and we'll see you at 12:10.